Kirk, how have you been? It's good to
I've
see
been
you.
good. How are you?
Doing all right, buddy. So, why don't we get, the elephant in the room, which is the symbol for the Republican Party, right? The elephant, isn't that it? And
Yeah,
the
that is
donkey for
that is the
donkey for.
elephant. I actually have a tie clip with one of those from my great grandfather. He was a Republican back in the day.
All right. Well,
I don't
what
think
do you
he'd
think?
be a Republican now.
You don't think you would be?
Oh
Well,
no.
a lot of Republicans wouldn't be Republicans now. Um, are you taking into consideration your positioning in front of the election? I've talked to a lot of people that just want to be out of the way, and it makes me think that they're going to be forced to chase the market because they have fear going into it. They just want to see, what happens here. What are you looking for, and how are you handling it?
So my positioning is always longer term. I don't do a lot of swing trading. I don't do any day trading. So I'm really looking at the next 3 to 5 year outlook, trying to get my catalyst lined up for the next year to 2 years. And I think that what we have going on right now in the markets isn't terribly affected by the presidential race at the moment. I think that the impact of what happens next week will be next year or the year after. So I'm not too worried about what the election does very short term. Can we get small industry specific sell offs or rallies because of who wins? Sure, we all know what those trades are. If you want to play them, go ahead. I am more concerned about the fact that market breadth has started to head the wrong direction, and I'm concerned that valuations don't match up with fundamentals. We know that in the short term that doesn't always matter, but
Yeah,
in the long term it plays out. So I'm looking for all the traders to run in a particular direction on something that I either like or don't like, so that I can make a trade. So if the short term guys bet against oil, I'll buy oil. If the short term guys run oil up, I'll sell oil. And it really is, my outlook that whoever wins doesn't change things a lot, unless there is one scenario that scares me, and that would be a red sweep. I think that could lead to a stagflationary environment. But if we get split government, I think we can wait out anything bad. And I think most of the secular trends are not disrupted. Timelines can be impacted a little bit. But in general, uh, none of the potential outcomes, Harris with a split Congress, Trump with a split Congress, a blue wave, I actually think is probably the best. And then the red wave, I think, is probably the worst. So we'll see what happens next week, but it's not really impacting what I'm doing uh, in a way that supersedes
okay.
valuation and market
All right.
breadth.
All right. So, you know, uh, tariffs are a tax,
Correct.
and they're not, it's not a pro-growth policy. Also was a big contributor to what happened in the 30s.
Correct.
So, do those tariffs and the slowdown and non-cooperation of global trade have you concerned, and what prices are going to do because of tariffs? Uh, it's kind of archaic economics, isn't it? Just slapping tariffs on. It's 19th century stuff.
It is. And, we have to differentiate between targeted tariffs and blanket tariffs. Trump is talking about blanket tariffs, and that's just another way of saying flat tax. That's really what it is. And I was just on a tour seeing clients in three border states. I was in Arizona, California, and Texas meeting with clients. And I know where the bigger money is going right now. So, I am concerned that the less sophisticated money is going to vote for tariffs, because if you vote for Trump, that's essentially what you're doing, and you're going to see that lead to stagflation. Because if we put a essentially national sales tax on everything coming into the country, other countries will retaliate. And that really destroys the globalism that has led to
It,
all of
well,
our pretty good standards of living. If you're
it
on this
speeds
show,
it up. It speeds up what's already happening. I mean, the
correct,
globalism, that started to fall apart under his first administration. He was the first
correct.
one to bring tariffs against China to the table. So, that's what I'm worried about is tariffs. You call it a national sales tax. Um, do you think he's going to try and eliminate um, income tax to have a national sales tax, or just add on another tax on top of income tax?
It is hard to know, but a red wave, you
Yeah,
could see income taxes substantially lowered at the top end. You could see a flat tax of 10 or 15%, and then tariffs to make up the rest. And I'll just tell you that, as a guy who makes a healthy six-figure annual income, it wouldn't really be bad for me, right? I mean, I would get a tax deduction on my income side, uh, that I wouldn't pay on the consumption side. So for me, making middle six figures, it's okay, right? So I'm in that 2-3% of the population that probably benefits from a Trump presidency. But like I said, I've I play poker. I have a big crowd of baseball folks that I hang out with because I used to play back when I wasn't the same shape as the ball. And folks who think that tariffs are a good idea, they're not sophisticated economically, and they're going to get what they deserve if that's what they vote for.
yeah, yeah, yes, we will. So what about the Fed? What are you thinking here? Have you ever seen the beginning of an easing cycle start the way this one did, Kirk? Where I thought that we could have had a sell the rumor, buy the fact, and yields would have bounced a little bit, but from 360 to 430 after a half a point cut on the first ease, I've never seen that before.
So people have been trying to tell me that the long end going up is indicative of a credit crisis, correct? And I think that there is a whiff of a credit crisis developing. I think it's 4, 5, 6 years out, but the market likes to anticipate, and the market likes to have a narrative. My anticipation is that this is where we're going to see the biggest impact from the presidential election. If Trump wins, I think the long end of the curve probably goes higher, because I think
Yeah, duration.
I think duration is a problem. And if Harris wins, I think we stay in this choppy range. So it really depends on the tariffs are a big deal. I mean, I don't think people understand how disruptive to the economy that could be. Uh,
Couldn't
I
we end up with shortages as well? Besides higher prices, it also leads to shortages,
so think about COVID and how all the supply chains got disrupted and
right?
manipulated.
Yeah.
Tariffs would be worse than that.
Okay. All right. So we're going to have some scarcity issues along with higher prices. If you could find what you want, you'll pay through the butt if you could find it. And
Right.
you'll go, things are rare. I can't find them. I guess I'll have to pay the price.
If President Trump wins, I'm going to start stocking up on toilet paper again fast.
Oh, the DEA made a bust uh, during COVID.
Yeah.
And yeah, they found about 5 rolls of toilet paper hidden in 10 pounds of cocaine.
I guess that makes sense on a Corolla.
Yeah, throw the coke away and you have the toilet paper. So, what about the dollar? I know that Vance and both Trump are going to want to see a weaker dollar if they get in because, they want to have an export advantage. So our farmers, agriculture, and what we produce here has a tailwind rather than a headwind. Do you think they could just jawbone the dollar lower if he wins? How are they going to lower the dollar?
By breaking the economy.
Okay, got you. All right, so that confidence, uh, people will lose complete confidence in what's happening here
Can
in
I
the
share,
country.
can I share a chart?
Oh yeah,
So I want to pull up my dollar chart. And I would
okay,
just like to point out to folks that um, I have been mostly right on the dollar for a very long time. Do you see a dollar chart right now?
yeah.
Okay. So
No, it's
back,
yeah, it's Bitcoin dollar,
okay,
Bitcoin.
here's your dollar. There you go.
Okay,
So going back to 2012 when I was writing for Wall Street Journal and Market Watch, and everybody was a huge dollar bear. That's all the talk was. Jim Rickards was at his peak of talking trash about the dollar, and I picked on the gold bugs back in 2011, 12. I said that the gold would collapse, and I said the dollar would go on a long-term bull market, and that's exactly what we've gotten. Now it's been choppy and in a range, right? It peaked here, and we talked about this, right? September 2022 on your show. I said that this was the top of the dollar. And, now we're in this choppy range. So the idea here is that the Trump administration wants to drive the dollar down, but the dollar really wants to stay range bound because our economy truly is exceptional. If you've been around the world, if you've talked to economists and business people, I have something called a Rolodex. I know that not everybody knows what that is anymore, but I have this Rolodex thing. I can pick up the phone and call lots of people because, I've got a little bit of street cred from having had that Market Watch gig. And I will tell you that unless the U.S. economy breaks, the dollar is going to stay range bound, and you can trade it between 80s and 120, but it probably is going to be really close to 100 most of the time. I'm calling it the millennial dollar. We're shifting from a boomer-led economy to a millennial-led economy, and there's not a lot of reasons for a dollar to get weaker. Now, folks who want the dollar weaker say, well, we'll be able to export more. No, not really, because the US does not compete on price. We compete on technology and quality and expertise and things that other countries need at a time when they don't have it. We're going to also send out a lot of food. So a weaker dollar doesn't really help the US export economy. It's an arcane argument. Frankly, it's ignorant of economics at this point. It defies the logic of what makes the US economy strong. So if they look to drive the dollar down, which they didn't have a lot of success doing, right? I mean, this is the dollar during the Trump era. They didn't have a lot of success. It went down for a little while and then it
yeah,
rebounded. They have to break the economy. Tariffs probably break the economy. Remember Gary Cohen? He worked for Donald Trump.
yeah,
He quit because he was so upset with the policies. And at the same time that the first time Trumpflation was used in an article in 2017, Gary Cohen was talking about stagflation. In my mind, and I'm just going to set up a big macro scenario here. If Trump wins, and especially if he gets Congress, I think that we see a repeat of the 2019 repo market, I think, on steroids. So anybody who remembers trading that in 2019, I mean, you remembered the disruptions. The Fed had to come in and bail out the
Yeah.
repo market.
Yeah.
Ultimately, it was the precursor and front end of a banking crisis that I think that we got lucky almost that COVID happened because it spurred all those huge bailouts. Without COVID, I don't know that Congress is awake enough to bail out the system the way that they did. So if we had just gotten a continuation of repo into a banking crisis in 2020, excuse me, without COVID stimulating massive QE
Yeah.
forever and bailouts, we could have seen an epic banking crisis and credit crisis. Now that we are a few years into this private credit boom, what happens if interest rates are higher uh, because of tariffs creating that scenario? How does all this private credit, which is infiltrating
Rollover.
business, well, how does it refinance at the
Okay.
5 year mark? Because they refinance every 5 years for the
Yeah.
most part. What happens then if interest rates are higher and the economy is slower?
Yeah. I keep reading about a lot of things are closing now. Restaurant chains, retail chains. It seems like a lot of people right before the election are thrown in the towel. There's a lot of business closures. Um, am I just too sensitive to what I'm reading? But it feels like that to me that things that were around are are they're less around now than they used to be.
So a lot of that is demographically driven. Right now, for every 5 baby boomers that retire, we only have and this is industry specific, we only have 2 or 3 people replacing them, depending on the industry. In medicine, it's 2 people, and skilled trades, 3. In restaurants and things like that, it's closer to 2. So you have roughly half as many people coming into the workforce and being entrepreneurs or being technical people or being medical people as the boomers that are retiring. And that's really a big reason why we need to have significant immigration over the next 10 years or so. We front loaded it under Biden. There's no doubt about it. And there's certainly people that have to be kicked out. It's not a million a year. Um, but I think a lot of what you're seeing in business closures is demographically driven. Part of my thesis on the economy has to do with climate change, but the rest of it has to do with demographics. This trip I was on, I just raised, you know, a lot of money to build a couple of buildings, and there is a significant lack of people to fill the buildings, with
Yeah,
businesses.
right.
And a lot of the commercial real estate, I was looking at 6 bankrupt buildings in San Francisco. Um, a lot of these buildings are not buildings that I want to have to deal with because the rehab, the conversion from commercial real estate to residential and mixed use is super expensive if the plumbing's
Yeah,
not already in the building. That's a mundane point, but if it doesn't have plumbing, it's hard to do.
right.
So, there is a lot of change coming. It's mainly demographically driven. It's partially driven from work from home. It's partially driven by a change in globalism. All these things work together. But I don't think the economy is shrinking because of pessimism. I mean, all you have to do is look at consumer buying, and you can tell that consumers are still strong because everybody's employed. Anybody who wants to work can work right now. There's no shortage of jobs. We have 6 or 7 million jobs out there. There's a skills mismatch still that we've talked about. A smart politician would talk about, you know, getting people trained and educated on the available jobs very cheaply, right? Because you don't want to have to spend a ton of money to get trained or educated. There's ways to fix everything that's out there, but
No,
I don't like using certain words when we talk about this, but we have problems with if you're a Bible guy, I kind of know you are, loving your neighbors. We have a problem with that. And whether it's the neighbor down the street or the neighbor who wants to come to America. So we have a lot of things to get over. We should remember George Soros and reflexivity, right? I don't want to trigger anybody by saying Soros, because I know he's been vilified, even though he seems to have been on the right side of freedom for a long time. Reflexivity means that if we get a collapse, we'll probably see a snapback in the other direction pretty hard, because they will just print, QE infinity. But do we really need to go through that process? I don't know. I don't know psychologically what we need. I just know that if we get a collapse, it'll repair itself over time. It'll repair itself much faster in the United States than anywhere else.
Yeah.
But
Well, I'll
I
tell.
am concerned.
All right. Well, you know what? If you're looking at real estate, Kirk, you have to check out my interview with Melody Wright. Do you know who she is?
I do not.
All right. I suggest you check it out. She was on Tuesday. You could find it
Okay.
on the site. You could find it on YouTube. So she what she's seeing coming with the narrative of lack of inventory, she's debunked. And what happened in Florida is only speeding up what she's looking for. So uh, I think you'll have your pick
Okay.
of buildings next year. Wait till next year if you think there are deals now, right? So it really
It
was,
could, it could be. I mentioned in an interview, I interviewed a REIT guy last year, a guy who has a REIT investment letter last
yeah,
year, and he was
yeah,
super high on Florida real estate. And I tried to argue
uh,
that's a bad idea, because I know that private equity people have been cashing out for 6 or 7 years in Florida. The private equity guys are usually the smartest guys in the room. So if they're telling you time to move out of Florida and start investing in the
yeah,
Midwest or Great Lakes states or somewhere else, you should probably at least entertain the thought that they're correct.
yeah.
Um, I have no
A
desire to
hurricane,
buy anything in Florida, that's for sure.
the Miami hurricane in 1923 marked the top of the Florida real estate market back then. That was a real bubble back then before the crash. Okay, so anyway, she thinks it's Florida's unrecoverable because only 4% have flood insurance. So anyway, I really, it's great to catch up with you, Kirk. I hope you have a great fourth quarter for you and your investors and Shooter.
Yeah,
And you and I will be talking next year in a brave new world. We'll see what kind of setup we have to deal with going into next year.
right. Do we have 2 minutes to talk oil?
Yeah.
All right. So last time I talked to you, I said the oil would be range bound and then we would potentially have a spike. I think that we are at a binary moment with oil. I think that if there is a broader war in the Middle East, you get your spike. But
Okay.
I think that you want to exit during that spike,
Okay.
because what I have witnessed in the oil patch, what I am hearing from the private equity guys, the drillers, the CEOs of a couple of big companies, you know who they are. US oil supply is going to be strong through the end of the decade. OPEC oil supply is going to be strong for a long time. There is no shortage of oil developing unless we blow some of it up. Also, I know that there's a lot of pessimism about EVs right now, but EVs are going to change their very nature in the next 2 to 3 years. The first thing that's happening is that there's been massive improvements in the battery technology. It should be
Mm-hmm.
30 to 50% better 3 years out. But also, the extended range electric vehicle, which is very popular in China, is basically being copied. And it's kind of neat that we're copying what they're doing. Is coming from Hyundai and Ford and a number of other companies. What is an extended range EV? It is not a hybrid. Get that out of your mouth. It is an electric vehicle with a battery with about 100-mile range, but also a 2 to 3 gallon gas tank and a generator about the size of an alternator in the back of the car or somewhere in the car that recharges the battery on the fly. It
While
ends
you're
up giving
driving.
you
Nice.
500 or 600 miles of range
Yeah.
on, say, 3 gallons of gas. So suddenly you're going to have the equivalent of 150 miles per gallon range or mileage. That would cut in the United States if over a decade we adopted that. That would cut our oil demand 40%
By
give or
half.
take.
Yeah.
So that's what's coming. The demand for oil is about to tip over. I'd say 4 or 5 years out. And the market likes to front run that. So I'm looking for an exit strategy in most of my oil investments sometime this decade. I would, I don't want to see a war in the Middle East, but if it happens, that's my exit. If
All right.
if,
Here's
if
my,
not, we'll see.
I thought I'd share this with you long term, around 62. If we get down there, um, I'm going to take a shot. We maybe returning this week, but I actually came in long WTI because I was expecting retaliation, but I thought it might be more the military target. So I would try it again down here at 62-ish next
I
year.
think we might still get that retaliation. It makes sense if Israel is truly as hawkish as Netanyahu makes it sound. It makes sense for them to cut off Iran's finances at the knees, and that means
Yeah,
attacking their major refinery
yeah.
capacity.
And
Can
I
you
think
make
they'll
that
go
chart
after their
bigger?
nukes.
Can you
Gonna
make
make
that
it,
chart bigger and pull it back? If you
you
can
mean,
switch that to a monthly chart from a weekly, you'll
okay,
see that your support is much lower.
40.
Yeah, it's much
Okay,
much lower if you stretch it out. So
okay.
I think there's a pretty good possibility that you see the price of oil in the 50s by 2030ish, and I am calling some of this panic pumping. You already are starting to see cheating with OPEC again, which took longer than I thought. But countries are starting to realize that there's no demand growth. I mean, and we'll get a little uptick because of the stimulus in the United States and China. But these countries know that if they don't sell their oil in the next 5 to 10 years, they might not
Yeah,
get to sell it. So
yeah.
they're going to pump. They're going to drill, baby, drill. That's what they're going to do.
Okay,
We don't
buddy.
have to, and we really can't. We don't have that much oil left to drill.
Okay. All right. Well, appreciate it, Kirk. I'll be in touch with you, get a hold of you, and we'll set up a date. Sometime late January. Our
Sounds real
quarter,
good.
another quarterly visit with Kirk Spano, and you.
Here's one last thing. Every year on Halloween, I make a prediction for the presidential election, and I was traveling for 2 weeks, so I didn't have time to buy a mask. But I always wear a mask of who's
Okay.
going to win.
All right.
The betting markets are wrong, folks. Here's your next president of the United States.
There you go. You heard it from Kirk. He's made.
Take the odds, bet on Harris. I bet on Harris in January. I
All
got
right.
pretty good odds.
Kirk Spano Damas making his presidential prediction. Thanks. Thank you very much, Kirk. Great to see you and talk to you, and thanks for giving us your time today.
All right. You have a good one.
All right, Kirk Spano, everyone. Follow him on X at his name. And Kirk does a lot of great writing. Where could they keep in touch with you and what you're thinking?
You can find me at Seeking Alpha, or you can
Okay.
find me on my website at fundamentaltrends.com. There's a link on X still, and Facebook and LinkedIn. So you can find me. If you Google me, you'll find me.
Okay. One of the best poker player traders out there, Kirk Spano.
Okay. I was the
All right, buddy.
59th best over 50 player in the world for 1 year. Then they all caught me.
Anyway, yeah, you'll get him. You'll get him this year, buddy. So thank you, Kirk. And you could join the team in 11 minutes on the Morning Edge. That's a wrap. Don't just count your pips, count your blessings. And we're all going to live through this. So I'll see everyone tomorrow to TGIF to wrap it up. Adios. And thanks again, Kirk.
Take care.
All right, buddy.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.